excited to have a conversation with James Mannering. He's a team member at Accountfully that helps us with our finance and advisory services. What's up, James?
Hey Brad, how's it going?
Good, good. We've supported and tried to help our clients over time from a finance and advisory, which can also be called like CFO services, which is different from our outsourced accounting services. So, before we kind of get started on getting detailed or in the details of what we specifically do and the projects we're doing for our clients and how we're supporting them, can you just give a little background of what your thoughts or how you explain accounting and looking backwards versus finance and advisory CFO looking forwards?
Yeah, and there's a bunch of different flavors and names that people use: finance and advisory, FP&A, fractional CFO. Really, what it does, it sits on top of the work done by the accountants and the bookkeepers, as you mentioned, from a backwards-looking perspective, and puts a forward-looking lens on it, as well as gets to the core of what the cash needs of the business are, how all the three financial statements interact, and actually come up with the cash flow realities or projections of a business. And what I like to do as well is just implement the right systems to analyze the available data that the company has, as opposed to reacting to the data that comes in, which is of course necessary. You need to take a look at what has happened in the past, but you should also have some type of element to project what the future might hold for the business, and even scenarios on top of that would be a best practice, in my opinion.
Yeah, that all makes sense. I mean, a couple things that I react to from that conversation or from your point. One, you need to have some real good information to be able to baseline looking forward with assumptions and actuals and everything, right? So before we even get started on something like that, you really want to have some good data, some accurate data, some complete data, to help you build a forecast or a model or a budget or a cash flow plan for a small business owner or a brand owner. And then number two, everything in life that we do when we're planning a trip, planning a wedding, wherever, I feel like we're good on the personal side of things. People are in terms of planning and looking forward and what's next, buying a house and things like that. But I feel like there's a lot of small business owners that have a really big blind spot for looking forward for their business. And maybe it's because they're probably too busy or don't even understand how to do it, or maybe don't have a resource or a partner to help with that. But is that kind of like how you feel at times when you deal with some of these kind of entrepreneurs of like, hey, this is all great, but do you know you're going to literally run out of cash in 4 months and you have zero idea of it?
Yeah, it can be. I think in the bigger picture, a lot of the founders, CEOs I work with are fantastic at the kind of the end goal vision, and getting from today to that vision, and realizing what inflection points are going to be around there. Also, just you mentioned a lack of time, but keeping up with benchmarks that are constantly changing, how the investment community, especially if you're tapping into any type of private capital, how those folks are thinking about businesses versus how they were thinking about it last year or 5 years ago. That's all stuff that I think most folks just don't have the time to do. And the kind of the nitty gritty of getting from where we are today, where we're going to be in 3 months, versus the bigger picture vision of what the business could end up being at its zenith. I think is something where I've found, at least, where owners can use a little bit of help and a little bit of outside support, both just from a hands perspective and from somebody that sees multiple companies, has experience within the industry that they're working in, and can kind of help guide them through that journey with a little bit more detail and a little bit more accountability on where we said we were going to be last month and last year at this point in time, where we are now, and why that is.
Yes, definitely. So then from an aspect of just kind of one basic question here, what is the difference between a budget versus a forecast versus a model? Like, how do you look at all those three of those terms in terms of what people need and what they mean, and what actually you define those terms to be?
Yeah, I consider a budget and a forecast pretty similar. I think you construct the budget after you've put all the elements of the forecast together. So you can run through a million different scenarios and go to the nth degree of creating false precision in all of your assumptions there. But once you land on your kind of base case of what you expect your growth to be like, and whether it's over a month, a quarter, a 3-year period, you take those expectations of what the business is going to return, and then you can create a budget around it. What's it going to cost to produce if you're a consumer goods company? What's it going to cost to run your systems if you're a software company? And get all the way down through all the people that you're going to need, all of the systems that you're going to need on the back end, all of the different consultants, lawyers, all of the different elements that you'll see appear on a P&L. I think it's important to get that forecast with some degree of confidence in it, laid down first, and then you can kind of back into what your budget is going to be based off of that, and knowing that for a lot of businesses, particularly a lot of small businesses, there are going to be periods, maybe extended periods, where you're not turning a profit. You're running at a specific loss, and that's okay for a period of time. But we also want to know, in constructing the budget, where are we going to get not just a profitability, but to cash flow stability as well. So I think it's a little bit of an interplay, but once you're solid on where you expect to be with your growth, then I think you can start to back into all of the other elements that come up with a budget. And as you know, things can change quickly, particularly for the smaller businesses. So keeping on top of it and adjusting it on appropriate cadences is just as important as the exercise of putting it together.
Yep. Yeah, definitely. And from a forecast perspective, it's kind of a good default time frame, like 3 years. Is that typically kind of what you see? I mean, a minimum could be even 12 months, right? But like, what do you kind of typically see and do out there?
Yeah, and I think for external reporting, investors, banks, if you're going for debt, like to see at least three. I've seen 5, 7 sometimes in the past. To me, that you start to get to a point where there are so many externalities and so many unknown unknowns and known unknowns that you're starting to do more of an alchemy exercise than an actual forecast at a certain period. But I think 3 has a decent amount of of basically accuracy that you can get to within it. Obviously, the shorter the time period, the more accurate you should be. But I think 3 is a good place to start from, because it also gives the perspective of, okay, if we grow according to plan, or if we grow according to 2 different deviations from plan, where are we going to be, and how is that going to impact everything from the top line to the bottom line, inclusive of cash flow, and what strategic adjustments will we make if scenario A hits in this area and scenario B hits in the others. And I think longer than a year, call it 3 years, is a good perspective to kind of get that bigger picture mentality out there and start to really orient the business around making decisions with that time frame in mind, as opposed to kind of a month to month, week to week mindset.
Yeah, definitely. I feel like when we help with when business owners or brands come work with us at Accountfully, and we get some consistent accrual-based bookkeeping and financial reporting in place when maybe they never had it, I feel like that actual business owner or the main point of contact that we're working with, I feel like they're actually learning things, right? Like understanding, oh, this is what this means. This is what my margins are. Oh, that's my break-even point, right? Like understanding kind of the business more. I feel like if you get a forecast in place and then you're consistently revisiting it, whether it's monthly, or understanding the inputs and the assumptions and the things that drive all the different calculations and the formulas and the looking forward, I feel like it brings an extra layer of, again, even more like IQ about your business and understanding like what impacts cash, what impacts profitability, right? Versus just kind of running your business day to day. You can then understand, well, if I, am able to get some discounts on this packaging, I am able to get more margin, and that means this, right? Is that kind of what you see, especially for the folks you work with, that more of a consistent kind of check in on a forecast after you build it?
Yeah, 100%. I'm glad you mentioned accrual as well, because basically all the trend analyses, all the KPIs we want to do, if we're not working on an accrual basis, those are going to have a lot less meaning over longer periods of time. And I think for, back to kind of what the service provides, and what, if folks are looking for this service, a good solution will provide you with these recurring workflows, reports, answers to these questions. But to your point on education, I think a great service over time will start to teach the business owner, and really even help the business owner implement this mentality throughout their business, about how these different elements kind of influence the business success or failure. How you growing your financial acumen as the business grows, because you're going to need to be a leader of a ideally progressively bigger company over time. And at a certain point in time, you're going to need to have at least a baseline level understanding of these financial metrics and finance language in general, that perhaps your background hadn't taught you yet. And I think that's where a great service and a great partner can help early on in a business and business owners development.
Definitely, definitely. When a question I'll get, like, when do I need to put together a forecast? When should I initially do one? And I'm sure your response is going to be the same as mine. It always depends upon
Mm.
what the needs are. Like, are you going externally to raise money and you need that? Are you just in place and you want an understanding of what your cash flow is going to be like in 12 months or whatever, right? But But I'm sure again the answer is it depends. But is there specific situations where it's time or it's good to kind of put together a forecast? Let's say not because you're looking externally for something, but maybe just for internal decisions.
Yeah, and definitely don't let the externalities dictate that timeline too. Far too often, it's a need, and you start looking for someone to
Yeah.
help you do it when your deadline's already passed to be able to do it. So typically, it does depend, and typically it's earlier than you'd think. I think it comes in kind of different stages. If you're just about to start your business or just in the early innings or months of actually getting started, it still helps to have at least some assumptions and some 10 columns on a worksheet together about what you expect to happen, and just to teach yourself, start to get oriented to the process of, how the financial ramifications of your success or failure are going to impact the business and are going to compound over time. And then as you grow, and maybe it is a need for an outside financing source, or maybe it's a need because you've started to hire a few people, onboard a few individuals, and you want to help plan out how that's going to impact. Then you can get a little bit deeper, and then when you start to get into a couple of years worth of operations, you really should have a pretty robust understanding of what's happened in the business and what you project to happen going forward. And I'd say that's about the time that at the very last point in time you can get to before having an answer for all of these questions in the form of a fully baked model.
Yeah, but the best practices though would be no matter the phase you're in of business before you start something like this, if you're going to, is getting your accounting and bookkeeping kind of updated and cleaned up and on an accrual basis. Again, that's a big point of this. If you're a product-based or an inventory-based company, we want to understand gross revenues. We understand your margins so we can factor that in. We want to understand what your overhead is, et cetera, right? That I'm sure when you build a forecast from a set of books that are cash basis and not cleaned up, it's probably a complete, much more shot in the dark or shot, who knows, much more uncertain, I guess, versus actual accrual-based financials that have some good consistent data. Is that correct?
Yeah, and the most uncomfortable situation for me is when I have to play amateur accountant and try to actually verify historicals. And unfortunately I have seen situations where the data buildup and the data messiness has gone on for so long and compounded so much that recreating it would take a massive accounting effort that the business can't afford, or perhaps there's even records that don't exist anymore. So absolutely 100% need to have bookkeeping and accounting have been, and ideally have been in there and been vetted, if there's particularly if there's been a vendor change or a turnover in that seat internally, of at least a few months, to make sure that anything that perhaps was done historically incorrectly has been cleaned up. Is modeling, it's at the end of the day, it's really just a series of arithmetic formulas. If it's garbage in, that's going to be garbage out. So you need to have that clean historical verified data, or else it's basically useless.
Yep, 100%, 100% on that. So then, from an aspect of having, I guess the biggest variable, or the biggest kind of metric or KPI, like on any company, right? Like cash, right? I mean, I don't know if you call it a KPI, like balance, whatever. One of the top five things you should be focused on consistently in your business is cash, right?
Yeah.
That cash, however you look at it. So at the end of the day, when you're looking at a forecast and you're, I'm sure you're looking at like revenues, margins, different things like that, but how important is cash to a forecast? And is that something you constantly look at?
It's almost always, like you're mentioning, the number one reason that someone will reach out to you or to myself, is they've lost kind of sight of how cash is flowing through their business in and out, and particularly in relation to the P&L. I was allegedly profitable last month. Where's all my cash? That type of thing. It's nine out of 10 times there's some analogous situation to that, when the business owner, operator, CEO feels like, okay, I need some type of fractional help on the finances side to help me figure this out. So it's definitely key. And I'd say if we want to go even specific to consumer product companies, where you have these large and growing cash outlays for inventory, and you have lag times for payments from uh, folks that are placing purchases orders from you, distributors, retailers, what have you. The interplay within a specific month or specific quarter, between what you're actually showing on your profit and loss versus how cash is moving throughout the business, can be dramatic. And I think folks will come in and they'll, I've heard on a podcast similar to this one, get to profitability, get to profitability. Well, for a company that actually produces goods and might have to pay for them in advance and might have to wait for receipt on payment to them, the difference between profitability and consistent cash flow positivity can be markedly different timelines.
100%.
And that's going to impact what you're able to do as a business, what potentially what lines of capital you're going to need to tap into to continue to run your business. And none of those are inherently, good or bad things. They just are realities that I think are, another level deeper into the finance realm than a lot of particularly first time CEOs and founders are used to, navigating.
Yeah, and when you have a good forecast in place and you understand how your cash flows through your business and when you're going to have periods of negative cash or positive cash and how many months on a runway you have in place, what you're able to do is you're able to get ahead of the types of financing or the relationships you need to make in the future of, hey, am I going to be able to float this 90 days on credit cards, or do I need to go get a short-term loan, or how do I remedy that or fix that situation, right? And then there's been relationships or different, types of financing you can get, whether it's debt financing or whether you have to give equity away, right? But the more proactive you are in that, the more the ability you're able to see that, and the more time you have to make those decisions, the more connections you can make, the more good feedback and information you can get from people that can say, hey, I can do this, but you need to have this on your tax return to get this loan. Then you can properly manage your business to get to that point, because then you can get a loan that versus getting, high credit card debt or something, right?
Mhm.
So it's like it just helps you make better decisions in general for your business, and when you're able to look forward and understand all of those assumptions and drivers that impact the business. Um,
Absolutely.
and then one thing you did say earlier, then I want to kind of get into actually like a real life example or of a forecast. But one thing of note for the listeners out there, it's like, don't think this is can be something that can get done in 4 days, right? A big a part of when people, you said it earlier, external factors shouldn't drive when you need it. You should kind of be mentally prepared for it.
Mhm.
But there's so many times where a brand or a client we're working with is like, no, I don't need that forecasting. I don't need any of it. Then all of a sudden they come and be like, hey, can you build me one? I need it by Friday because I'm going to do a pitch or my investors need it. And you're like, wait, what just happened? Like, this is the point of we said 3 months ago, we reached out to you about this. Now I can't just put it together and we don't have enough turnaround time to do it. So it's very reactive a lot of times is what happens, correct?
Absolutely. And you were making great points on proactivity. I think that goes to everything finance in the business. But even in following that thread that you just came up with a step further, even if you are able to get something in front of somebody by Friday, you're the one presenting it. You're not going to know what's in it. You're not going to know what it means. It's not going to hold up to even the thinnest level of scrutiny. And that's unfortunately, a situation that folks do encounter when they're not proactive with it. So get that education part of it as part of what we're able to provide with this service. Get yourself a few reps under that so that you can actually present this. And all you're trying to do with this model, it's not particularly if it's an investment opportunity, nobody's going to make an investment decision based on how pretty your model is, but it is kind of a checkpoint to see that you've thought through all of these things, that you understand how capital is going to be allocated, and to give them a kind of a level of trust in you to use the capital that you're asking for effectively. And if you present yourself as, oh, somebody, did this for me and I can't really answer any questions on it, you can lose valuation points. You can lose potentially an entire round in general because they're, not going to look favorably upon you if you can't answer even, the most basic of questions about what you're presenting to them.
Yeah, I mean, everything is sales, right? You have to sell
Yeah.
that person or that bank or that entity or that investment group about your business, and then everybody understands there's various intangible factors on why we all make decisions of yes or no and different things. So the more you put together and the more you understand it, the best. So why don't we go ahead and if you can bring up like a kind of an example forecast and a couple quick things, and then we'll just kind of go through it. Number one, most forecasts are just built in Excel, right? Like it's all these forecasting tools that exist are probably great, but a lot of times it's like Excel is just the way that the forecasting world works, right?
Yeah, the customizability of it. I've tested multiple dozens of different tools over the years. Some of them solve, 20 to 30% of the problem. Some are a little bit better, but there's always a learning curve to getting on board, and then B, particularly for external reporting, it's always going to get pulled back into Excel. You're always going to have functionality that a off-the-shelf tool can't support. So
Yeah.
there are definitely systems that can help, and I definitely wouldn't recommend Excel as a database to house all of your information. There are several operating tools that are much, more efficient and much better suited for that. But the short answer after the long answer is yes, it's going to always come back into Excel.
Good. Yeah. Yep. That's kind of what I always tell people. And then if you're gonna go raise money or sell your company, like those analysts are always just gonna need it in Excel to play around with the numbers anyways.
100%.
All right. So then that's number one and number two, then you can bring it up. Essentially, you said a three statement forecast earlier today. What do you mean by that?
Yeah, so that's your profit and loss, your balance sheet, and your cash flow statement, and how they all interact. And for a consumer, a packaged goods company or consumer products company, there's going to be a lot of balance sheet activity. Probably not as much if you're a SaaS software company, but really just understanding how from a profit and loss, which is what revenue did you make, what did you spend to produce that revenue in terms of COGS, and what were all your operating expenses and other items like interest, taxes, all of that goes down to your net income. And then from there on both the balance sheet and cash flow statement, how does that translate into the movements that happen throughout the business in a given month or whatever period you're looking at that took you from your beginning cash balance to your end cash balance. And that's what anyone that does due diligence on your counterparts, on investors or whomever the external resource is going to be, is going to want to see the interplay between those three statements, and having good accounting support to make sure that the data is in there in the right spots and verifiable. That's another landmine you can step on if you're trying to DIY stuff that you don't fully understand yourself. Is a situation you should try to avoid. But basically, when it comes to a model, we try to roll it up into as digestible of chunks of that three statement model as is possible, while still maintaining the integrity of having each portion of the profit and loss, balance sheet, cash flow statement that need to be in there so people can understand what we're projecting, and how we're projecting relates to what's already happened in the business in the form of your actuals.
Yep. Good. All right.
All right. And we got
Uh,
a pretty simplified version of a sample financial model here for the illustrious ABC company, which shout out to ChatGPT for creating that logo for me. But basically what we have here are 5 different sheets, 2 of them more reporting function, one being that kind of abbreviated P&L, balance sheet, cash flow statement that we were just talking about, and the other select KPIs, and 3 different worksheets that we use to kind of build, in this case, bottoms up forecasts. And what I mean by that is inputs on both the revenue side and the expense side, as well as the cost of goods side as well, on how we expect the business to grow in terms of customers gained over time, and how we expect the business expenses to grow in terms of people, vendors, and pretty much all categories of spend throughout the P&L. So I'll start here on the KPI sheet. It's kind of this is meant to be kind of a cut out and paste into your investor reporting or your internal reporting, whatever it may be. And we've got some, if I zoom in here, different. This is more of a SaaS focus to it, but these are all kind of customizable. Basically, the interplay between different financial metrics or financial and sales metrics that can get you what your business is going to do over time. So we've got it on a quarterly basis out through 2 years here. And it's pulling information directly from our forecast there. Got the opportunity to change scenarios and see how, if we do really well in the high scenario, what that's going to do to all these different metrics that we have here low, or if we, do nothing but what we've already closed to date. Obviously, this looks pretty catastrophic, but it is a common request to see, what if nothing happened for the rest of the year. But that's essentially one of the 2 main reporting features that we have, and we put into every model that we build. And the other, this will likely look somewhat familiar to most that have poured over their financial statements, but how we have gross revenue, COGS, and then all the different what that means for gross profit and gross margin, all the way down to the different rolled up categories of the P&L. And again, this one being SaaS focused, we've got R&D, sales and marketing, and G&A is kind of the main chart of account categories, and who's moving the needle underneath all of these is determined by personnel, subscriptions, and then in G&A a lot more like business operating expenses, legal and professional services. So all of that rolls up into the end of the P&L here with our net income, and then we've got these adjustments. And as I was mentioning before, the slimmed down version of a balance sheet and cash flow statement based on kind of customized for the business or the industry, what we expect to move cash on a month-to-month basis. And of course, over the entire timeline, are we bringing on new capital down here outside of operations, and then where that leaves us for cash over a certain period of time. So these are kind of the two biggest and most important reporting level sheets. We can move into what we actually use to populate these with our new customer. We're using ARR here, but if you're on the consumer side of things, think of this as just a revenue build based on how we're going to acquire customers. You saw that scenario feature I was using earlier. This is where that toggle is populating from. And we can do it by different geographies, this is built out by different customer sizes. So we've got our small customers with a smaller value, medium, large. We always keep an eye on cash on most of these sheets. So it's got an end of month balance view, how many customers we're bringing on, and then all the different other metrics we need to populate the model, all populating on a monthly basis up here. Personnel sheet. So this is for all employees that you currently have. So this is a fake build out of what a company might look like at a similar size here, and then folks we might want to bring on. So we can either, if they're not hired today, we can switch them to say we might need a data engineer at a certain month or point in time, or we may want it to trigger based on when we cross a certain revenue threshold. So say we not going to need this person until we cross 5 million, and then that's a little bit of this built-in scenario analysis that we can do and kind of help the model move along without needing to have too many manual checkpoints or adjustments that need to be made when we really know what the triggers are going to be. Might as well just build them in from the start. And then probably the most boring, but also arguably the most important sheet here, all of the different, and anonymize these and change the numbers a little bit, but who these vendors are, how they roll up into the main area of the P&L, and then how they roll up into the sub area of the P&L. So we can have, input base, which is, really we know who these folks are in this COGS contractor line, and they charge us $5,000 a month. So we'll just do that over time. We can do it for commission, say on the percentage of new business that comes in. So look at how much we expect to close in that month, and plan to pay out a percentage of that. We can do it, by customer. If this specific vendor is, something that's customer facing, we know it's going to cost us $250 every time we implement somebody. We just do it by customer. Same thing for a lot of internal systems. We can do it by employee count. So few different examples of different ways to populate this, but essentially what it is just what we expect to spend by category, and we can even get down all the way to the vendor level if needed. I would say slimmer versions of these are more appropriate the bigger you get. I think the smaller you are, it helps to kind of map out to this level of detail. Not 100% necessary for companies, or really not even worth all of the time that it takes as you get to a certain inflection point in your growth. But that's essentially what drives the whole thing. Try to keep it as short, simple, easy to audit. Use conventions like blue for hard coding, green for pulling from another sheet, black for formula, so that other folks, either within your business or external to your business, kind of can understand and easily audit where everything's coming from.
This is great. Thanks for walking us through that. I've seen forecasts that have about 78 tabs in them in Excel, references, and I think keeping things as simple as you can, especially how it works as part of the size of your business, right? Like if you're a smaller, younger company, if you're gonna go and hire somebody to help put together a forecast, let's try to keep it as simple as possible. You don't need like the $15,000, Porsche, right? Can you find something for $5,000 that can do it in 6 or 7 or 8 tabs? I think the bottoms up approach makes sense because you're actually looking at the details of what drives revenue, what drives the expenses versus like, hey, I want to hit $1 million in revenue. Let's start there, then back it down. It just doesn't. It's not as I think good of a practice or a process for somebody to understand their business. So, so I guess just what's like the turnaround time on something like this? Like if you got started and got information, and kind of what's that process look like?
Yeah, and if we take, say, an ideal case where they have someone like Accountfully doing their books, we've got good, solid information, and they have, those kind of high level goals you were just describing, and assumptions underneath those, we can turn around start to finish in about 4 weeks. I'd say it typically takes, 4 to 5 even, and then some edge cases a little bit longer. It really is just the long polls on these, or if you come in and kind of sign and start the engagement and haven't done that legwork on your financial statements, or have somebody to do them with the veracity that they need to be done, or you haven't really thought beyond larger numbers and goals for years, it's going to take a little bit more time to iron those out, because we're basically going to have to build them together. And usually what happens is there's a scenario of, hey, show me 1 + 1 = 3. And like, we will, some of these things that you think are immovable are going to have to be variables if we're going to put this together. So that the edger cases, can take as long as 6 or so weeks, but we try to wrap it up in about 4 weeks. And I think we typically say a 4 to 5 week timeline.
Yeah, and then clearly then the best like ROI on a project like this and getting a forecast is not just getting it put in place and then just to raise money, then literally you forget about it for the next 5 years, right? Or the
Mm.
next 12 months, right? Like anything, it's like consistent practice of reviewing the forecast, whether it's monthly or quarterly. Same thing with your financials, just closing your books each month. Are you reviewing your financials monthly? Are you talking to somebody about it? So the more you're able to practice and have conversations with people and walk through it, the better I think you're going to be for like running your business and making decisions.
Yeah, absolutely. And the only thing I'd add to that too is, if it is important to look at the month to month, but it's also important to understand what you assumed would happen in a given month, and whether that's going to carry over, or that's a yes no decision that didn't happen. And I think that can trigger whether we need to just kind of shift things around a little bit, or go back to the drawing board. If it's a CPG company, did that 500 door retailer say no? Or did they just not get back to you till the first of the next month instead of the
Yeah,
31st with the purchase
yeah.
order? So that's the type of stuff that, it helps to have this process in place. And it also helps to have, a recurring work stream where you're evaluating these things and how it's going to impact the long term.
Yeah, and then as we kind of wrap this up, I guess what is just one thing, like one recommendation, or like one do, for a small business owner that is maybe putting a forecast in place? What's one thing that they should definitely like maybe focus on or understand, if you're following what I'm saying there?
Yeah, if we're talking about kind of DIY, I would say it's the stuff we talked about in terms of putting a bottoms up together, which is making sure that the assumptions that will build up your forecast tie to your bigger picture goals. And if it's a general do, I'd say, and you mentioned this earlier, proactivity. Start to understand that if are you putting together, a business that anybody's going to want to invest in, or anybody's going to want to buy the products of. You have to, take these steps and start to have conversations, figure out what benchmarks are, and make sure that, those don't have to dictate your specific strategy or what you put into a model, but you don't want to be so far afield of what everybody else is doing that, you're not going to be able to get the partners that you need, either, from a capital perspective or wherever they may be, to actually grow the business. So I think that, general note of proactivity is one that's, for all things finance, is definitely in the dues bucket.
And what about a don't, a general don't?
Yeah, we hinted around this a couple of times, but don't operate without systems that can provide you clean, verifiable data. And I'll include support into those systems, particularly if your business is growing rapidly, or this isn't the native language, your native language, from whatever your background may be before you decided to start and run this business. Again, that compounding effect of messy data. There's nothing that can take a company down quicker than that, and kind of out of nowhere, because you really are just operating from a false sense of what's going on. And those companies are surprised more than others are, and the main reason is there's no source of truth to anything, so every day is kind of a come what may situation.
Yeah, definitely. Well, this was great. I learned a lot just from this chat, and I hope everybody out there did as well. So if you're looking, or if you need to look for a cash flow plan, a budget, a forecast, a model for your business, here at Accountfully, we can help you with that project, and we'd be happy to have a free consultation of just understanding what's going on, what you currently have in place, talk through your variables of your business, of your needs for a forecast or a budget, and then see if it's a good fit. So, James, really appreciate the information and the time and everything you're doing for our clients at Accountfully.
Yeah, awesome. Thanks for having me on, Brad. That was fun.